welcome everybody to the last session in what has already been an incredibly productive conversation, and I have full faith will continue to be a provocative, interesting, and productive conversation around racial equity in corporate governance. I'm going to start today by introducing our panelists. I'm going to go through in alphabetical order, those who are joining us, and then moving into some questions. Because of the time constraints, I'm going to provide a little bit of background on each of our panelists, but of course they all have a wealth of experience that goes far beyond what I can summarize here. So I'd encourage you to look each of them up if you want to know more about the experience and the insights that they are bringing to today's conversation. So starting us off, I'm pleased to welcome Luba Goltzer, a partner at Wall Geitschel, where she is co-head of the firm's public company advisory group. She advises public companies and private companies, foreign private issuers, and private equity sponsors on a range of corporate governance and compliance issues. Luba regularly advises on board-related issues, including board and committee structure, board leadership structures, ESG, and sustainability matters. Lisa Lambert has not yet joined up there. Lisa has joined us, sorry. Lisa Lambert brings a depth of experience as a director on the boards of UL, Laredo Petroleum, Panther AI. She also currently serves as the Chief Technology and Innovation Officer for National Grid, and she is the founder and president of National Grid Partners. Sean Mendy has spent his career working to close opportunity gaps in Silicon Valley. He is a co-founding partner of Concrete Rose Capital, an early-stage venture capital firm focused on capitalizing underrepresented founders, investing in companies serving underrepresented consumers, and helping early-stage companies build diverse teams. And Shepard comes to this topic from multiple perspectives. Following an operating career in tech startups, including OpenTable, she now sits on the board of Series E venture-backed Honeybook and is co-founder of Him for Her, a social impact venture focused on board diversity. Additionally, and quite significantly, and co-authors with Crunchbase, the annual tracking study of diversity in private company boards. And the data is just so critical to these conversations. Last, but very far from least, we have James White, who also brings a range of experience. He currently serves on several boards, including serving as the executive chair of Air Protein. He's the board chair of The Honest Company and lead independent director of a firm. Jim is a former chair, CEO, and president of Jamba Juice. He's also the co-author of Anti-Racist Leadership, How to Transform Corporate Culture in a Race-Conscious World. It's out later this month. I've already pre-ordered my copy. You can do so right now. It's perfect for, I think, everybody who's tuning in right now to dive a little deeper into these issues. So with that, let's go ahead and start the conversation. So we spent a lot of time earlier today talking about the public company setting. And so naturally, one of the places I'd love to start off are on the key differences between the public company and private company contexts, thinking about the different statutory and regulatory landscape, listing requirements, market demands, and how those factors can lead to different outcomes, both in terms of board diversity and culture, but also oversight of racial equity in the corporation. Luba, would you like to start us off?
Sure. Thank you very much. Really glad to be here at this excellent event today. I think, picking up on something I think Professor Fairfax said about pressure, although both private companies and public companies have in some ways very, similar constituencies, right? They've got investors, they've got their employees, they've got their communities. The pressures on public companies in terms of making progress on board diversity, workforce diversity, equity, all these things that we're talking about have, just been more significant, right? They've just been more significant. They've been more visible. There's more visibility, and then there's more pressure for accountability in the public company sphere, right? So we have, we heard on this morning's panel from State Street, right? State Street big institutional investors. They are extremely vocal about demands for public company governance and what they expect of public company directors. They are taking it out at the ballot. Very visible, very vocal, and kind of what I always say, hitting directors where it hurts, which is for public companies, their election and their support. And so I think between that and having smaller shareholders, from the public company setting, you have just shareholder proposals coming from smaller shareholders. Also in the last couple of years, making extreme progress. I mean, most of the supported shareholder proposals that are getting more and more traction are on diversity and equity matters, right? Gender pay gap, racial equity audits, EEO-1 report, all these things are just, they are just gaining momentum and a lot more visibility. And on the private side, there's less visibility, but as we heard sort of in the fireside chat, I think when you think about the investors and the shareholders, which are really one of the primary groups that are putting this pressure on, there's been less, but I think hopefully increasing support. A lot of these large and very influential private equity funds are doing more, are looking at their portfolio company composition, but and there has been more pressure from the limited partnerships, from pension. Some pension funds are basically saying, if you don't make progress, we're gonna take our money elsewhere. So there is more of that, and I think there will be, but the progress has not been, I think, nearly as great, because at the end of the day, private companies have been private, and sometimes they like to say that way, right? And so, and the only other thing I'll mention to start, and then I'll turn it over, is I think the other thing about visibility is I think the other big constituency is sort of your employees and your besides your shareholders, your employees and your community at large. We saw after, and a few people said it, today after the murder of George Floyd, you saw public companies very vocally, making public statements, CEOs, boards coming out, pledging to make changes. And I think that's where that could be, a kind of an equalizer, because while we saw that because they're big public company names, I think many private organizations did the same, and perhaps it wasn't as visible, but it was visible to their their employees and their communities and their sort of close constituencies. I hope, and so I think now we're sort of at the cusp of hopefully making those changes and living up to those commitments.
It's a really nice job of summarizing both differences and similarities when we're facing dynamism in both settings. Yeah. James, do you have anything you want to add as we look at the contrast between these two environments?
And I maybe pick up where my colleague left off. If I look at 2020, the combination of the pandemic and the racial reckoning really changed everything. It changed the conversations that happen in the boardroom. If I think about the difference between public and private company board governance, historically, private companies by definition are going to have a more closed network. But I think to the positive, they're typically more strategic in the work that they do in the boardroom, less around governance and administrative responsibilities. The board members in lots of ways are more tactical or surgical in the work that they do, focused on go-to-market or supply chain or M&A. But I think importantly, the changes that I see moving forward are more market-driven, which is the comment that was made here, the comment made by in the fireside chat. Consumers, customers, and employees are actually demanding change. And the best companies, the best private equity companies have actually started to embed this in the work. I happen to sit on a KKR portfolio company, Bay Club, and unlike what I would have seen historically and I've been sitting on public and private company boards for 20 years, every board meeting we cover DEI. I happen to work with the CEO on a monthly basis around this topic, and that's unheard of, at least in my history as a board director. So I'm actually hopeful. I also sit on another private company board, which is family-owned supermarkets. Same thing. Both of these examples, as a board member, I'm visiting with members of the management team and the CEO on a monthly basis. And again, this gets back to the market-driven nature of the change. One of the comments I made often in 2020, we've got boards and management teams that are built for this moment, and we've got many that are not. And I think, as you heard from the speaker from KKR, this is just in the best interest of the companies that sit in that portfolio. And we truly have boards and CEOs that aren't built for this moment. This is going to be a requirement moving forward as we all compete for talent, and customers and our employees, importantly, from a generational perspective, are going to hold us accountable to this work. And that's different kind of pressure than we've seen before. So I'll stop there.
It's a great way of starting us off. Thank you both. And I think that does lead the question, because we do have so many constituencies that seem to be pushing for these types of change, seeking to hold companies accountable. One of the questions that arises is, what are the contractual and market-driven initiatives that can be used to advance racial equity in the private company context, and a little bit of what those initiatives look like. Sean, do you want to jump in on this?
Sure. We as a firm have been very focused on this, since the inception of the firm several years ago. Just diversity. Our entire firm was built on the premise that mobilizing underrepresented talent would generate superior returns, and the landscape has changed dramatically in the 4 short years that we've been around. As has been mentioned several times, 18 months ago, summer of 2020 was certainly an inflection point. I think a great example of a contractual, initiative that emerged as a result of kind of the action that was taken post George Floyd is the concept of diversity riders. So as investors, folks are now explicitly committing to making room for underrepresented, GPs on cap tables. So this is an initiative that was championed by Alex Guerrero at Act One Ventures, started, with a handful of funds. And I think now it's close to 100 billion in AUM is represented by firms that have signed on to take the diversity rider pledge, where essentially for every term sheet that they offer, they are adding in a clause where CEOs and executive teams are committing to making commercial best efforts to, one, find more diverse capital, so underrepresented GPs and firms to work with, whether it's women or Black or Latino led or veteran led, which I think is critically important. In some cases, you have firms who are trying to add additional language around building executive teams and actual practices in terms of people practices within organizations, though that's not part of the kind of blanket diversity rider initiative. Ironically, the only stories I've heard about pushback on diversity riders have been from CEOs and executive teams that are the most committed to DEI, who have said, I actually don't want any limiting factors on who I can recruit into my team. I'm walking the walk. I'm living this already. I have not heard. I think it's pretty it's been pretty well received, and CEOs have recognized for a number of the reasons that folks have already mentioned on this panel and throughout the day, why CEOs see the value in something like this. In addition to just the contractual initiatives that we've seen, there's clearly a demand for this from the market. When our firm was founded in 2019, we hypothesized that a third of founding teams would actually care about this, about building diversity within their senior teams, in their early teams, and then also on their boards. And anecdotally, I'd say 10% of the folks that we talked to immediately understood the value as we were seeking investments and trying to find the right teams to work with. Post George Floyd, it's inverted, and 90% of the folks we talked to are already bought in. Now the issue is actually finding the folks who are going to walk the walk post investment, right? Everybody can say, I'm committed to this when you're, first getting to know each other and raising capital. The real question is when the friction arises, post making that commitment, are you going to stay disciplined and actually hold true to what's being asked of you? And I think that we're still getting our bearings in terms of having a process to fully identify who those CEOs and founders are. But as of right now, we're not able to meet demand. There's just so much demand for capital from folks who are going to be true partners to CEOs and executive teams on this. So diversity riders are kind of a no-brainer for many of these founders.
It's great because it not only links to the theme we've heard all day about how transformative 2020 really was, but it also nicely goes to Professor Fairfax's question of how do you institutionalize this in a way that really ensures rigor over time and ongoing discipline. And so I'd love now to shift just a little bit and think about this from the director perspective, which so many of you know well, and thinking about what private company boards are doing well with regard to leadership on the oversight of racial equity and where you still see areas for improvement. Lisa, do you want to start us off on this?
Absolutely, happy to do that. Well, I come from a world where we invest in technology companies. So I'm right here in the heart of Silicon Valley, and we've got technology startups and we've got venture capitalists in my sphere of influence. And I can say that historically, we don't have the best reputation for doing a whole lot in racial equity. If you look at the numbers, they're not that good. We've got about 8% of our entrepreneurs that are women, less than 1% that are ethnic minorities. And likewise, in the venture capital world, somewhere between 5 and 7% of the general partners are women, and less than 1% are racially diverse. So when you have those numbers, it doesn't set you up very well for affecting change. And that's been the biggest challenge that I think we faced in our industry. There are a few things that we're beginning to do, but I think you really do need to solve the problem of having more representation, more ethnic representation on the general partnership, decision-making side, and more, Black and minority founders starting up companies. And that's just not happening right now. So to that change, I don't think we're going to get real material growth here. But that said, I think over the last couple of years, as others have noted, there has been more visibility. And so the visibility to the issue has created a sense of urgency to respond in some way. And so I think there's definitely a greater awareness of the impact of having no strategy. The media have been exposing companies that are ignoring the issue. So I think that is a real risk, particularly for the LP kind of pension fund endowment funded general partnerships that invest in technology companies. So that has created a greater sense of urgency. We see more tracking, more reporting of performance to the board of directors. I sit on a number of startup and public company boards. I see the public company boards doing a lot more than the startups, but even at the startup boards, the board of directors are asking for more visibility. What do the diversity numbers look like? How are we adjusting our hiring practices? Reporting on our performance. And so that accountability has begun to start. I also see both more venture capital firms and more startups hiring chief diversity officers, people that are responsible for setting a strategy and executing on a strategy around diversification. And so with that and a little more visibility of those results to the leadership and to the employees, I think you start to see some change and some effect. And even just systemizing the approach, right? Having a human resource management solution that can help with the tracking and the management of those choices, making sure your hiring panels have diverse participation. They sound like basic things, but they're actually pretty fundamental things if you're going to affect change. The problem with the startup world is that startups are founded largely by male Caucasians and Asian males as well, but largely males. And we tend to hire and socialize out of our networks, and our networks tend to look like us. And so, if you're a Caucasian male or an Asian male, you're probably going to build your founding team with people that look like you. And so getting more women and getting more ethnic minorities starting up businesses will be a huge accelerant to this. I think until then, we're going to have to rely on some of the more tactical changes that I mentioned and really put some pressure on both the LPs that invest in general partnerships and the general partners themselves to invest in more diversity.
Thank you, Lisa. I really appreciate that. I think it's been nice to have the hopeful tone through so much of today's conversation, but I think also taking a realistic look of having a snapshot of where we are right now is critical to understanding that even if you have a good trend line, it might be a long time before we might get to where we want to be. James, you've also spent a lot of time moving between the private company and the public company setting. Do you have any particular insights with respect to what you see private companies doing particularly well and particular challenges that they face?
I think from a board diversity and a diversity overall, I think, again, the point I made earlier around the really the market is driving a lot of this change, but I'll give a couple of examples. A public company board that I sat on that is now a private company today, Medallia, in the experience management area. Their CEO, again in 2020, would have been one of the CEOs, Leslie Stretch, that made a commitment around racial equity and justice. But unlike some of the comments that were made that followed with no action, Leslie and his management team held themselves accountable from an equity perspective based on changing the representation in their organization from 1% Black representation to 13% over a series of years. And I'm happy to report in less than 2 years, they were able to move that number to 7%. And it's a technology company in Silicon Valley. So that's an example of what can be done if we focus on it. So that would be one example that I share that I'm quite proud of. And if you go to the startup space, I chair Air Protein. We've got a dynamic African-American woman who's the founder, Dr. Lisa Dyson, and she's intentionally building her company from the boardroom through the building of this organization with this lens in mind. So I'm super encouraged by that. One of our most recent funders is Ford Foundation, going to some of the comments that Sean made earlier. Ford is kind of baked into their investment with Air Protein reporting and responsibilities around diversity, equity, and inclusion. And I absolutely love that. I think we're going to see more of that moving forward. It's out of Ford's mission fund.
I want to putting my my lawyer hat on for a second, just picking up, because I can't help myself. Picking up something that James said, a lot of these companies, and adding to this, the pressure conversation is, although not successful, a lot of these companies that made very public statements that then were, questioned about whether they were actually living up to their commitments, especially out in California, out in Silicon Valley. There's been just a lot of shareholder litigation in this area for companies that made vocal commitments, but then were criticized for not having, okay, you need to look at yourselves, right? Look inward, look at your board. You're not leading by example. You're not following through on these initiatives. And so, that is another, ultimately, most of them were dismissed, but, money, time, visibility spent on, fighting and defending these, very public statements. So to hear a situation like James is talking about, where an organization actually followed through on their commitments, I think, it is a great example. And I think most organizations have made those efforts, public and private, but just another example of the continuing, external environment.
Thank you for that, and always welcome to jump in. And I also want to remind everybody else who's joining us on this webinar, you can submit questions at any time through the Q&A. We are monitoring those questions, and we're looking forward to getting to your questions. And I really want to pull you in. I meant to pull you in earlier because you just have such a wealth of experience on all of these issues. So one, you could kind of continue a little bit on the conversation we're having right now over how do we create the data around accountability, which you've done a lot with. But of course, another issue that is a challenge in every environment, and is particularly a challenge in the private company environment, is pipeline. And so just, do you want to chime in on either of those issues or both?
Yeah, absolutely. Thank you. And thanks for having me, Kate. You know, as I think about the challenge of bringing diversity to private company boards, you know, I think at the heart, Lisa is right in pointing out that the root cause is the same as in public companies, which is just a sort of over-reliance on the personal networks of people in the boardroom. But I think there are a couple of unique challenges for private companies. The first, Kate, you pointed to, which is, you know, lack of data. It's hard to change what you can't measure. And that's why, you know, 3 years ago, Him for Her, along with Crunchbase, started to track annually the diversity of the boards of the most heavily funded private companies. So one of the things we found in our study last year is that among companies that had raised in excess of $100 million in funding, 21% of those board seats were held by people of color, broadly speaking. When we look at that by gender, that's 18% of board seats held by men of color and 3% by women of color. So enormous work to be done. And we will be publishing our 3rd annual study shortly. You know, Lisa pointed to or alluded to, I think, the second real challenge with privately held companies, which is the lack of diversity when it comes to funders and founders, because that has a real downstream effect on the boards of privately held companies. We found that 53% of board seats were held by investor directors, and then another 22% by CEOs and co-founders. So you've got 3/4 of all of these board seats held by funders and founders, and you see the reflection of the lack of diversity there show up. The great news is that we at Him for Her see a lot of real momentum and enthusiasm and commitment around the investment community, VCs, PE firms. We work with more than 70 of them to really start to address this issue in the boardroom. And that sort of points to the third opportunity/challenge. So the most immediate way that private companies can bring diversity in the boardroom is through the appointment of an independent director, somebody that gives them perfect degrees of freedom to kind of reach out and complement the competencies and the demographics that are already in the boardroom. The challenge with that is that private companies don't have a whole lot of muscle around kind of going out and conducting a board search. And so the great news is that there are lots of organizations, ours is one, that are there to help companies reach outside the personal networks of their CEO and their sitting director to find terrific candidates who not only bring demographic diversity, different perspective, but can also, as I said, augment the expertise that's already existing in the boardroom.
That's great. And Sean, do you want to build off that and tell us a little more in the VC context, specifically the role that you see investors playing in helping to diversify and build the pipeline?
Yeah, there's some really, you know, a straight line ways, as simple as investors take a lot of board seats in early stage companies, right? So the more underrepresented GPs there are, the more diversity there is from investors, the more diverse boards are going to be over time. But then also just to build on what Ann said about networks, you know, our view is that you know, we didn't arrive at the, you know, kind of the homogenous state of tech and venture and corporate boards overnight. This is the result of 400 years of compounding inequality. It's a result of, you know, discrimination, systemic discrimination for centuries that we are just unwinding now. And I actually believe that currently the biggest challenge that we need to overcome is just inertia. And how do we, take these homogenous networks that are really vicious at this point and transform them into virtuous networks? And the best way to do that is by diversifying networks when it comes to all types of roles we're filling at early stage companies. How can we make employee number 6 at the next Google, Apple, Facebook underrepresented so that they are, one, able to participate in the massive wealth creation that's going to happen there, and they can then become investors themselves. But 2, also just get the operational reps that now make them a qualified board candidate by virtue of the experience that they got there, or make them make them investable in the eyes of investors who want to find folks with those successful companies and invest in them. And so I think really working to diversify networks at the early stage, that's something that we offer that I think more investors should be intentional about, and many are. Is how do you play the role of partner to CEOs who want to do the right thing, but are already doing something very, very hard, which is to build a company? How do you appropriately challenge them when they are going to go and hire for a critical role at the early stages and go to their immediate network? How do you push them to spend another week meeting candidates? What's really going to happen if you take that week? I understand you want to fill the seat right now just to keep the company and the momentum going, but if you take 1 week and meet this, Black woman outside of your immediate network, like what is that going to do in the long term? And if she's not a fit for that role, now you've got her in your network, and for the next role she can be considered. So really pushing folks to do that, pushing folks on things like job descriptions, especially at the earliest stages. How are we reimagining requirements like really, arbitrary requirements like 5 years of experience in a role versus the actual thing that you're looking for? Are you looking for 5 years of experience, or are you looking for somebody who's actually managed people in that role? And that's not, for board roles, it's a whole other conversation, but for those early roles at companies that lead to the careers that will then yield a generation of board candidates, we've really got to be doing that work early and be thinking in terms of 20 years, not in terms of 2 years. And then, the last thing I think is again, what Anne spoke about, which is just being very, very intentional about ensuring that we are explicitly and directly interrupting the homogeneity of networks and introducing folks who just would not know each other were it not for some type of actual forcing function. I think investors, that's just a critical role for us to play. It's the most valuable thing that we bring. I think capital is a commodity at this point. Relationships are, maybe more valuable than investment at this point. And so really working to bring diverse relationships into the fold with founders who want to do the right thing, but need true partners to actually achieve that.
Very rich and helpful understanding of the roles that investors are playing for growth. And you want to jump in on this too?
Yeah, I'd love to build on it. Great point, Sean. I mean, inertia, absolutely 100%. And then, with the job description, I think that's really important to point out that boards are wise to think about the expertise outside of a title. I think we've all been in boardrooms where sort of the first reaction is, we need to add a new director, let's find a CEO, blah, 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 right? And as soon as you accept that assumption, you've tipped the scale, something like 9 to 1 in favor of a Caucasian man. And so if you can step back and really ask the question, what is it about the CEO experience? Is it, having run, an X million dollar P&L or led this many people? Are there ways to find that outside of that particular title? It really opens up the degrees of freedom and enables you to consider just an incredible wealth of talent that you probably didn't even know existed.
It's been really
I
helpful.
could jump in there too.
All right. Go ahead.
Right on, Sean. I mean, the other thing that I really love what you said is about the providing the experience. And I think for all of us, I mean, even for me at my own firm and what I see at my clients is getting that that different, that person who thinking outside the box with the level of experience. That is the only way that you're going to get those people sort of at the next phase of being on the boardroom, creating wealth, all of that stuff. So to me, I think if we're talking about kind of nuts and bolts and how we can really ourselves and people in our networks, our clients, and our communities, really make a difference and contribute is really being thoughtful about how to open that door and how to get that person in to provide the experience, because and we think about it at our own firm, if you don't get it at the beginning, how are you going to make it to the top and then be an influencer, right? So I really think that's a great point that I wanted to underscore as well.
Yeah, it's a critical consideration. I love to see it highlighted from so many different perspectives. And I think a related issue is there's these ongoing challenges, but there's also particular inflection points in the life of a company where you can really reflect and focus on these issues. So Luba, do you want to actually, I'll go right back to you and talk a little bit about when you're transitioning from private to public, or even potentially the reverse, the role of thinking about racial equity in the governance environment, and how that comes through, or how that's addressed at those moments of transition.
So yeah, I'd love to talk about that. So that's one of my favorite things about my job. So I work on a lot of IPOs, and I am thrilled to be a part of that inflection. And from the governance perspective, thrilled to be a part of that inflection point where companies are transitioning from private to public. And I always, get asked about, okay, what are the requirements? What's the new NASDAQ rule, and what's the SEC rule, and what's the requirement? Is there a state law? Are we California? Are we really domiciled there? And those are all wonderful, relevant questions. But what I would sometimes love to see even more is having had thought through what we're talking about now earlier, right? Setting the culture, setting the stage for these things much earlier in the life cycle, so that when you get to the IPO and it's that process really illuminates and sort of when you lift the hood and you see all the cracks, right? Because if you hadn't thought about this and it hadn't been a part of your culture as you were growing up, as you were evolving and building your company, it's going to be a culture shock to do it at that point. And so of course will help, and the commitment to do it in that space and time is, as I always say, you got to start somewhere and at some time. But I think for private companies and for investors and private equity funds that have a whole host of portfolio companies, what we're seeing now, and I have seen it more in the last couple of years, is this thinking starting much sooner, and starting at the board level and throughout the organizations, and the investors really putting, again, back to the pressure, really putting, mandating and putting the pressure on their portfolio companies to think about, to diversify their boards, to think about their overall, employee base. I think, and you're talking about data. I mean, I think if you looked at the statistics, probably historically, you'd probably see that, all the public, companies and private equity firms that brought companies public over the last long period of time, probably a very small percentage of them, of those directors at newly public companies were, women or, Black, Hispanic, other, diverse directors. So I've seen that change recently. Again, going back to the beginning with the, pressure with the public versus private. You have, companies that are listed on NASDAQ. There's new requirements now, to have a woman and a person from an underrepresented community by a certain period of time, 2026. But so there's that. But I think the intentionality, is starting. For it to start a little earlier, to be a part of the culture, to be ready, for it to be important, like we talked about before, for it to be important to the CEO, to the chairperson, chairman of the board, and to build on that so that it's a part of the ethos of the or of the organization. But it's very, it's a very exciting, that point in time is also a very exciting time to make an impact, and to if you haven't done it before, to really start a new a new chapter and a new beginning.
Maybe the only add I'd build there, I joined two recently IPO'd companies in the last year, and I think we're seeing more of those companies start much earlier, 12, 18 months out versus having a rush 6 months in. And I think it just works out a lot better. You get folks integrated. It's a part of the culture, and it really matters. And I continue to focus on the point of all the stakeholders, but I've got to tell you, how many comments as I go on some of these boards, just from the rank and file employee base. So representation really does matter, and I think ways that people don't really account for in particular, but agree with the comments that were made around this movement to really set the company up for success moving forward as it relates to governance and diversity related issues in the boardroom ahead of going public.
Yeah, if I can jump in. Yeah, I love that, Luba and James. I mean, I think the pressure that Luba describes on companies headed to the public markets is really what breaks the inertia that Sean was mentioning earlier, right? And that's unfortunate that it happens so late because, as James and Luba both mentioned, there's so much value to be gained by having that diversity in the boardroom earlier on. This isn't just a tick the box for the public markets. It's really about adding value for all stakeholders, and earlier stage companies, are really poised to do that, whether it's bringing in a voice of the customer to the board once you've got product market fit, or, as James talked about, we've talked to a lot of CEOs. One in particular comes to mind who was preparing to address his employee base at an all hands, and was putting together some slides. And one of the slides was sort of headshots of the board that he wanted to talk about. And he realized, holy cow, I can't possibly show this group to my employee base. And so I echo what everyone has said about really encouraging companies and their boards to think about building that board as a strategic asset much, much earlier.
Thank you so much for that. And I think it's actually builds on all the different themes. I mean, we have the importance of building it into the DNA. We have the importance of, if it's not inherent in the DNA of the founders, of the need for the disruption, the need to build the networks, the need to do it earlier rather than later. So those relationships really develop in ways that are productive for all involved. And I think that also very helpfully expands our view beyond the boardroom. We've really been focused on the boardroom. That's naturally going to be a locus for these conversations, appropriate and healthy locus for these conversations. But as we're shifting beyond that, we're looking at the investors, we're looking at management, and we're thinking broadly about kind of the different people who could be in a position to help coordinate and drive initiatives around racial equity. What are some of the other opportunities for helping to pursue these initiatives? Lisa, do you want to jump back in on this?
Sure. Yeah, happy to. There are a number of tactical things that you can do, like hiring executive search firms who are diverse, who prioritize diversity, like recruiting from historically Black colleges and universities, like partnering with minority businesses, suppliers, business development projects, joint ventures. All those things, I think, help create more exposure to an ethnically diverse community, and build the Rolodex, build trust, build rapport. But I still do think you have this underlying issue, and I'm not sure that inertia is the challenge here. I think the real challenge is that founders can choose who they hire, and there's a very strong argument made by both founders and by the investors that support them that speed is of the essence, and homogeneity is a characteristic whereby they can deliver speed. fast decisions, fast pivots, be agile. You need to be all those things to be a founder of a technology company. And so diversity actually is not helpful to that. Homogeneity is helpful to that. Like thinking, like social and economic backgrounds, like political orientations, educational circles. And I think that's a more fundamental challenge. And I don't know that you can legislate that. I don't know that you can even enforce that at a board level, because these startups are being founded by the people they're being founded by, and they're recruiting the people that they believe they have this commonality with that will help them expedite the process to scale. It's all about scaling when you're in the tech world, and you have to hire quickly, you have to get product market fit quickly, and you have to grow the business quickly, because that is your competitive advantage when you're living in the land of the giants, the incumbents that have a lot of resources that can impact your growth trajectory. So I think until, one, we diversify those networks so that people have more rapport with ethnically diverse people, that you're probably not going to see a lot of change. I don't see the VCs enforcing that because they want these companies to grow. That's why they're investing in them. I don't see the limited partners enforcing that because at the end of the day, they want to make money. And so you have these both practical, historic, and economic reasons for change not occurring. And I think until you deal with those, it's going to be hard to really change the paradigm here. We can certainly make tactical adjustments. We can certainly make the boards a little more diverse, but it comes down to what's the best vehicle for executing our plan, our strategy as a startup. And I think you will always get the folks that start these companies hiring that they need to have discretion to hire the people that they know, trust, and think like them, which will prevent real change here. So
James, you're on mute. If you're ready to respond, or if I should, because I have thoughts on that.
Yeah, I've got a different view. I'll let you go, Sean, please.
I want to hear what you have to say, and hopefully I remember what I'm going to say. So
I've got a slightly different view. Lisa, I think those are all advantages until they're not. And I think we're starting to see that the world is absolutely changing, and that might be the historical paradigm that we've lived in the technology space. But I think as there are different models that are successful, that have more diverse leaders and networks at all levels that are incredibly successful, I think you're going to see change. You've got change being forced inside of some of these companies today with what I view as the old kind of technology model. And there are some exceptions, significant exceptions of large technology companies that have taken a different approach to that topic. So I'll pause there and Sean, turn it to you.
I'm not talking about large technology companies. I'm talking about startups.
Yeah.
And startups start with 5 people.
I get that. I get that. I work with startups.
Yeah. So I think you have a lot more levers if you're a large technology company than you do if you're a startup. And I've invested in startups for the last 25 years, and that's been my experience. I don't think it's a lost cause. I wouldn't be here if I thought it was a lost cause, but that is a fundamental issue. The reason the numbers haven't changed is because of that. And we need to see change. And I think some of these other things that we're doing will be helpful to affect change, but we really do have to deal with that core issue. I think having more ethnically diverse people coming into Silicon Valley and getting opportunities will help build that rapport, build the relationships, build the trust, and get exposure to the folks that are making these decisions, because right now they have very limited exposure. This is all I've done for the last 25 years, and I can say that with confidence.
John?
My experience now is that this generation of founders, not all of them, but enough of them understand the value of diversity in terms of building great businesses. And if you give them the tools to navigate the friction that comes with early diversity, then they can overcome that friction. And then it will yield better business results. We're focused on diversity, not for altruistic reasons. We have a separate foundation that we run to focus on that for the impact side. We're focused on diversity because we think it's going to generate the most alpha. And we seek founders who understand either, on their own or through conversations with investors like us, that as a CEO, the E is for equity. And that if you're building equitable systems within your organization, if you're defining process, defining systems, building mitigants to the friction that comes with diversity into how you run your company, it's going to yield better long-term results. I don't think all CEOs think like that. I think enough of them do, and I think that the companies that do best over the next 20 years are going to understand that early. So I don't think I would just disagree that CEOs are actively looking for folks who think the same way of them in terms of where we're talking about the homogeneity. White male CEOs are not saying, I want to hire white male CEOs because we think the same way. White male CEOs are hiring other white male CEOs in many cases because that's who's in their network, that's who they've worked with in the past. And if you introduce folks who share their vision for the company, but may think about things differently, might have different perspectives that they can bring to the table, different life experiences, different lived experiences, I think enough CEOs value that. I disagree fundamentally that this generation of CEOs who I'm talking to every day are seeking homogenous to build homogenous teams for the purpose of speed.
I began my comments with diversity at the top creates diversity throughout the population. So it's not in isolation. I'm saying that is a variable, that is a factor that's real. But if you hire diverse teams, you are going to get a more diverse population. So getting exposure to HBCUs, getting exposure to search firms that hire diversity, making it a priority, all the things that I mentioned earlier are still legitimate. They're still true. This is another variable that needs to be considered. I launched when I was at Intel, the first of its kind, a diversity fund.
I don't see how that, I don't understand how that relates to what I just said at all though.
Oh, I'm agreeing with you, Sean.
Oh.
I'm saying, yeah, and those are all things that I said earlier.
Okay.
When I was at Intel, I launched the first of its kind diversity fund, then called Intel Capital Diversity Fund. It's a $125 million fund focused on investing in women and ethnically underrepresented minority groups. So African Americans, Hispanic Americans, and Native Americans. And it was the first of its kind, largest fund that's ever been formed until recently for investing in these underrepresented groups. And we invested in a number of companies. The fund actually still exists. They've added to it, expanded it. And one of the things that I discovered in that, because we had a criteria that you had to either be one of the ethnic minorities or a woman as the founder or CEO, or at least your top 3 executives, including the CEO, had to be in one of those underrepresented groups. And what we found is when we invested in those companies were not just diverse at the executive level, those companies were diverse throughout, because those people have networks that look like them, and they hired the senior leader and the leaders below them and those same populations. And so if you do have diversity at the top, you will get diversity throughout. There's no question about that. But we can't argue with the fact that a lot of the startups in high tech, at least, are founded by white males or Asian males. And so they're building that core team that looks like them. If they have any sort of innovative thought and are willing to explore the possibility of including ethnic minorities in that leadership team, I can guarantee you, and we've proven that out with this diversity fund, that the rest of the population will look more diverse. No doubt about it. So 100% agreement on that. But there is another side of it, and I put that out there just for consideration.
I guess the final point I'd make is I do believe there's a generational change. And I think we can't lose sight of that.
I not agree. The generational change is also not altruistic. It's CEOs, whether they themselves believe it or not, they understand that when competing for talent, they've got to be thinking about these things, both underrepresented, diverse talent that they're going to hire, but also folks who may not be underrepresented themselves, but do care about this and want to be intentional about who they're working with and what the organizations that they're representing and contributing to are how they're shaping the world.
amazing how looking at the same glass, half full and half empty, can actually illuminate very different dynamics. And it is really interesting to hear. I think people actually saying similar things, but through very different lenses and having different perceptions on where we're moving. And I think that then does raise the question, which we've been discussing all day and which has come up in the few of the questions, over how we deal with the frictions. So I don't see anybody denying that the frictions are real and the challenges are real. And I think I hear what James just said, and some of Sean's comments and some of the other comments we've heard from Luba and others actually even earlier in the day, is that companies need to recognize early on that overcoming those frictions is key to their success, key to holding on to the employees that they want, to attract the employees they want, to be able to appeal to their customers in order to, and then there's also, I think what I'm separately hearing are questions about how in learning how to overcome those frictions and lead a diverse team and bring a diverse team together, you're potentially engaging in a qualitatively different type of decision-making in ways that allow you perhaps to grow, not with the exact same trajectory, perhaps you will, but you also might have more resilience. You might spot opportunities that you wouldn't otherwise spot. So there might be different trajectories of growth, but growth still can be meaningful. And we're getting through this, and again, some of the questions and comments. Sean, you look like you wanted to jump in, and I don't know if anybody else does. Final thought.
No, I was actually emailing Lisa so that we could find a time to continue our conversation, because I want to hear more about her experience. I know that's not polite to do that while still on the panel. So I'll let somebody else go first.
Luba, you want to jump in, or I just?
No, I mean, I think you know, we've covered it, and I did see some questions in the chat. So any ones that I can answer, I'm happy to later offline. I mean, I think the day has been really illuminating, and I think the conversations have been important. And from my perspective, I mean, that's what's going to help us all, is to continue, you know, the dialogue and learn from each other's experiences and tips and recommendations on how to you know, continue to the dialogue, because I think that's for better or worse, the pressure that we are all putting on ourselves and our communities is what's going to, you know, continue this. So sometimes it's altruistic and sometimes it's the needed pressure.
Like Lisa, I want to thank you all for being here, but I also really want to thank all of you for the work you are doing on these issues in so many different environments, in so many different fronts. Sean, I love that you want to follow up with Lisa. That is exactly the type of spirit that we are trying to cultivate here. Please go ahead and make sure you're taking that opportunity as soon as it happens. I think part of the way we learn to cultivate and grow our networks is creating every opportunity possible to reach out to people who see something differently than we do and in a different way than we do, and see what we can learn from them. And see where that ultimately takes us. And I think the payoff for that are the ones we've been talking about all day, along with a more concrete and more specific with respect to a shift that really occurred in 2020, and that we're all hoping, but still waiting to see if it's going to have all of the legs that we hope in terms of bringing about the transformations in the environment of corporate governance and in so many other aspects of our society. I want to thank everybody who's joined us today for a part or all of this conversation. It's an important conversation. It's one we continue to have. It's one we've been having for years. And I really appreciate the opportunity for these forums and for, again, all of our panelists throughout the day to have been here and to be part of this conversation, but also all of the participants for being here and being part of this conversation. So thank you.